Hi, Warriors. We had the broadcast on Tuesday talked about the divergence in cable at new highs, and that's a second drive. I think it's going to be enough. I think we're headed towards 131. Caveat being tomorrow's a big number. Maybe that's going to be the catalyst to drive the dollar higher for this correction to complete. Euro, I still think has downside as well. Whether it bounces on the number or not, this is going to measure back down towards, I think, 111. So we'll see what happens there. The biggest trade was buying yen, posted in the room at down here, 42.20, and booked some of it yesterday. And I've come out of the remainder, even though I'm looking for 146. I don't know, we could have a weak number. Yields are soft, squishy on the front end, not as much on the long end. So anyway, successful trade on that. Still long some dollars from down here. We were buying the stuff down here, and then I bought this pullback this week, and it's still looking good. I'm looking for par 50 to par and a half. This will not only be an exit long dollars and short euro and Aussie and any other trades that were related to the dollar comeback. It will not only be a liquidation, we'll be looking for shorts. As I said down here, not impressed with this being a low with this divergence reading. So up here, I'm going to attempt shorts for one more low that could take us to 96 or 95. So we're a little more than halfway there to the target. It was tough here, not as tough to buy this pullback here. Okay, so I want to talk a little bit about what's happening in Canada is trying to put in some type of three drive to a bottom or diverging. Maybe it has some more work to do, but I would not be short Canada here. I do believe that before we head down for much lower numbers like 32, we're going to get a rally towards 140. Whether or not it dips on the number one more time or not, look at this glaring divergence compared to prior lows. So definitely something you don't want to be short and should be looking for long side counter trend scalps. The gold silver ratio is declining a bit today. I want to put together a postulation. A lot of this will have to do with if there is one more shaking of the trees in the S&Ps, we could get a third drive to a top in the gold silver ratio. These last two peaks happened during peak intensity weakness in the market. This is where no who wants silver. The economy is collapsing. All I want is gold. So if we're going to get one more run in gold silver ratio, that might even reinforce that we're completing something here in the S&Ps over the next 72 trading hours. On Monday, I said it's looking towards later in the week to do something. And I thought that Apple could trade a bit higher, but the S&Ps did tag 61.8 up here, or just missed it. We could have some follow through because we have a lot of strength in, at least we did, in Microsoft. So here we go. I mean, if you covered up the title of this and didn't know it was the S&P chart, between here and the moving average 5,800, I'd be looking to do something. 5641 was 61.8, and today's high is 5641. So, it could reverse today, and then something happens. What if we get a strong jobs number? Maybe it'll have a little more oomph left in it because unless there's a big reversal starting from today, with the day left, and we are in a new month, but the week is still a positive week. So I'm looking at more like the 57, uh, 5680 level, maybe even 58. We'll see. Next couple of days are critical. I wouldn't be getting long here. And my next move, because I think the other option is we peak in here, we flush one more time towards 4,500 into the summer. And then we have the melt up that the Super Bowls are looking for. If we start trading much over 58, 58, 55, then we're not only going to new highs, but we're going to have a melt up to 7K or better. So a couple of the issues that I was looking to short, let's see how Apple's doing today, because I believe Apple has earnings today. So, this has not been real strong rally compared to what we've had with some of the other mags. I'd still like to see it up here around 220 to try it. And NVIDIA, I was talking about maybe 124. So that still has some legs left in it. So I'm not ready to do it yet. The banks look like decent candidates. They look like they're running out of mo. And even if we don't go to new lows, it's going to be a pretty good shakeout to test this recent bounce in all of these different markets. Something that, I said that this could happen with the miners. They're getting hit pretty hard today. Taking a look at Numa down 160. So that's a pretty good pullback. I said look for 48. We're almost there. GDX down pretty hard too. I said look for 45. And if they get through these moving averages, there's problems. Then we're looking at much deeper because I still think gold's got 2,700 in it before it's all said and done. Um, and that's quite a ways from here. I'm not saying that there aren't going to be, sharp rallies, but I prefer the gold to be a short over silver. Look at the difference in these candles. And just in case we don't make a third drive to a top and just break down from here. Again, uh, you could do the gold silver ratio here, hope you're early, and one more pop for you to do more of it. And the last thing I want to bring up is TLT. You guys know, even though my bias is for lower rates on the short end, um, but I had to do it. I had to cover the title up and look at this flagpole and this straight line break and then this rally. I did it at 50%, which was early. And then yesterday almost got to 61.8 back. So it's a very key day for the bond market. Also read that, the Treasury has the ability to buy bonds, and they're going to be doing so. What are they worried about? Okay, so I guess besides the Fed, we're going to have the Treasury in there trying to support the bond market. It almost makes me think like they're worried about something. Penetrating 88 would be the first sign that there's really a problem back under this 88 and a half. And then, I extend this trend line out like this, and you have it about at 87 and a quarter. And this was a 9 handle decline. So 9 handles from here is 78, which is the low of the move, I believe, all the way back last October. I think we'll do more than that, but I think that's where we're going back to. So let's look at that. Where is that? Okay, that's not long term enough. It would be this low here, right here, which is 77.89. So getting a little reversal week if it follows through to the downside. We could have problems with bonds no matter what the short end is doing. And that's a wrap. Remember, don't just count your pips, count your blessings. Have a great day. Remember, tomorrow's the NFP. There's nothing wrong with flattening out and reacting to it. I'll be back after the number tomorrow to discuss reactions and if there's anything that looks compelling enough for us to do. Had a good week being bullish a dollar, especially being bullish US dollar yen. And, we're going to complete this move and then we're going to get on the bear dollar bandwagon again. Um, there is a lot of pessimism in the dollar, which is another reason that, if we get through 102, then something else is happening. But for now, I'm going to consider this a bear market rally in the dollar. And remember I said the market's been going up with the dollar recovery, right? So if we're going to have one more dollar sell-off to say 96, I don't think that's going to be bullish for risk. I rest my